We come now to step 9, which is where we do our big 3. That'll take a few minutes. The Goodwill, the NCI, and the consolidated reserves. You must have a separate working for each of the big 3. Please be careful of that. And so, the Goodwill, the first of the big 3. You start with your investment at cost. If you remember, in the group structure, we had 268, which, of course, was the investment check we did. If you remember, we had some loan notes, etc., coming through. The NCI at fair value at acquisition is given at 65. So if you add them up, you have 333. And away from that, of course, you take the net assets, if you go back to your net assets list. And so the Goodwill, of course, is 23. No impairment in this particular question. The NCI was given at 65 just now. And you add to that the growth in the net assets from the net assets list of 130. So 20% of 130 is 26. 65 plus 26, 91. No impairment. So whatever your NCI was valued at date of acquisition 2 years ago, you've got to add to that the growth since then. And you take your correct percentage of that. Do be careful when you're dealing with NCIs. It's very easy to get sidetracked into the associate way of thinking and start bringing in the wrong percentage. Be very clear. That comes from doing a good group structure. Then you have your consolidated reserves, which is obviously your parents' own reserves, less the PUP. Add to that the P's investments. And, of course, the investments we have here, the group share of post-acquisition reserves, which is the net assets change. If you remember, going back to the net assets list, 80% of 130 is 104, and then 30% of 80 is 24. And so, because there's no impairment in this question, that total goes to your consolidated reserves. So it's the parent's own reserves, plus minus any adjustments, plus what the parent created by controlling the subsidiary and influencing the associate, minus any impairment. So there are 3 steps, usually, to the consolidated reserves. So why does goodwill arise? It's things like a good reputation, a good location, that kind of thing. In other words, assets given value over and above the book values. Indeed, the book values are revalued to fair value, and if there's value above that, that's called goodwill. What is NCI? Well, it's just outside interest in our subsidiaries. And the component parts that make up a consolidated reserves figure, parents, plus minus adjustments, what the parent created in the subsidiary and the associate, minus any impairment. Do be careful, those little bits are only the parent share. So know your computations like this very, very well, as they arise regularly in the exam and can guarantee you marks. But be flexible. In June 2011, for example, the examiner specifically said, don't do goodwill. And when you look at the feedback, thousands did it. If the examiner says, don't do something, either it's going to give you 0 for doing it, or it's going to be impossible to do, virtually impossible to do. So only do what's required. There'll be more than enough that'll occupy your 45 minutes. So that's the end of my step 9. I hope you've benefited a little bit from all of that. I'll move on to step 10, which is the putting together the consolidated statement of financial position. So as you can see, extremely easy technique. If you know how to deal with the associate, you know how to deal with the goodwill, NCI, and consolidated reserves, this is so very simple.